Okay, so we are recording. Looking at Bitcoin on the weekly, first of all, I'd like to first of all, a look at the RSI. So the bullish momentum was dictated very much by this line of support over here, which ended up being a slightly higher line of support over there. Um, and, this acted as a very clear level, which unfortunately, once broken, is a very bad sign for the Bulls. And especially, not only did we break it, but we went up to test it and we pierced through it, but just this throw over just brought us right back down. So the next very relevant level of support actually hasn't even been touched yet, which is um, this zone over here. And before I go on, my general conclusion of the analysis that I've made is that we will see a lower low in terms of price action. So I will be using some of the information here to try and show why I think that. And as I just mentioned, one of the reasons is that we haven't actually reached this zone yet. So this zone is created by, well, the high of this zone firstly is based on the high over here, from which was a very clear resistance. Um, and the low of this zone is created, actually, it should be a bit more like here, which is created by, first of all, the bounce from here, which went right up, and then the resistance over here, resistance over there, and then, of course, the bounce up into bullish territory over there. And everything in between, of course, is a perfectly viable place for a big bounce as well. So the fact that we haven't even entered this zone yet, for me, indicates that we are very, very likely to test it. Again, not only because we broke through this important support, but secondly because we even actually resisted it going to the upside. So the next level which I'm looking at, to be very critical, is between the 6,000 and the 5,500. I'm slightly more, I think there's slightly higher chance that we actually reach even 5,500, but certainly within this zone. And the reasons for that, again, is a few reasons for confluence. One is the fib level, so assuming the Elliott wave is 1, 2, 3, 4, 5, and this corrective wave coming down is much more apparent on the daily, but just for now, note that this is the wave that we're looking at, the 1, 2, 3, 4, 5. And so this indicates that the 786 is over here, and of course it's not going to be entirely accurate on that level always. So I think that to indicate this zone is more important. And it just so happens that this zone has, the top of it has a confluence of this support over here for a potential double bottom. And notice that this yellow line is actually of support is actually for the daily. I'll look into that into a second. But let's just assume that it reaches the top level over here. Going to the daily, you will see that that would indicate it would be somewhere around here, the 6,000 level. But I actually think that it's slightly more likely to go down even further and to reach this 5,500 level over here. And let's just go back to the weekly to finish off that analysis before we go to the daily. So yeah, briefly, this trend line over here with the one, it only had two levels of support, which is why I think it's fairly weak trend line, and several trend lines have been drawn over the past few weeks. There's also this one over here. Actually, that one looks like it might even also be confluent with this level. No, not exactly. But the point is that the trend lines alone are not going to be enough of an indicator. We definitely want to have a look at other important factors as well. Yeah, so looking at the weekly, of course, Tabia mentioned that we have this engulfing, bearish engulfing pattern playing out. One, and of course, some of them may not be entirely engulfing the body, the previous body, but certainly it looks like we have 1, 2, 3, 4, and now a fifth one playing out if you consider it as just being the body. So this pattern, it has to stop eventually, just in the same way as things which go up too fast or very fast have to eventually come down. The same thing goes the other way. So we mentioned on the weekly that we're coming very close to this support, but we haven't actually quite touched it yet, which is again an indication to me that we will actually come a bit lower to test at least the 6,000, if not the 5,500. And then looking at the 5,500 more specifically, why I think it's slightly more relevant is that first of all, we have 2 bounces off it here, 1, 2, and secondly is that this bounce was the low of this sort of huge move up over here. So once we bounced off of here, we had this huge move up. Then again, we did come down sort of to break this to 5.8 level, and that gave us this huge upsurge in price. And the $6,000 level has more or less only one very critical bounce off of here. But I mean, yeah, whether it's 6,000, 5,500 is not something which I'm going to spend too much time thinking about, but certainly within this range is very, very critical. Just to summarize, because of the 786 fib, because of the horizontal trend line over here on the 5,000, which touches once, twice over here, because of the double bottom potential over here, and of course because of this smaller trend line of the recent downswing. So those are many reasons for why I think that's a very critical and potential level to come down to. And then of course the next level is the 3,000 level, which is even more critical in some ways because it acted as a very clear resistance here and then it has a very clear support. In terms of the MACD, well, we do see this bearish momentum over here, but I don't think too much can be said about that. I think it's more important to look at smaller time frames to see the relevance of that. So, oh yeah, of course, the other thing is the volume here. So look at the red volume candlesticks. They're generally always much bigger than the green ones, which is not the greatest signs. That being said, we do see that the bearish volume is slightly decreasing here. So we had this to say that this is bearish volume is not really accurate, since most of this candle was the bulls bringing the price back up from the $6,000 level. But this week has 2 days left to go. It doesn't look like we're going to have as much bearish volume as here. But the more important point is that really the bears are still in control in terms of the volume here. Okay, going to the daily. Okay, and of course the weekly has, if you draw the trend line on the weekly, this blue line would indicate that this $5,000 level is going to be an important one. Sorry, 5,500 level. But going on the daily, this level becomes sort of not that relevant, and we see that this yellow line, and the thing is that this yellow line actually comes down to the 5,500 level as well, just a bit further down the line. So that's really, again, a very important level that I'm looking at. Looking at the daily, well, first of all, one reason why I think that we're not quite yet done with this downswing is that we had this volume spike over here based on the past sort of couple of weeks, but it wasn't as explosive as this one. And I feel like for a proper medium to long-term trend reversal, we're going to have to see a similar volume to here to really make that happen. And of course, not only that, but here we had like these two very long wicks to the downside with this explosive green candle. And here we really just don't have that at all. We have this wick, okay, coming down. It's great, but so far this day, if you look at the 4-hour volume, it's really not or sorry, the 12-hour volume, you really don't see the this as being an indication of a trend reversal just as yet. um, yep, and then looking at the so of course these trend lines all are pretty much the same. You have the bounce from 6,000, 5,000 up there. Looking at the RSI, so here we see some a couple interesting things. First of all, this 30 level is an important level, which we bounced off of here, here, and now here. We also have some levels in the past, I think, where we bounced off of it. But of course, the next level of support is really this area over here, where we have the 1, 2, 3 bounces. That would be looking at about the 26.8. So again, there is a small possibility that we're going to bounce off of this 30 level, as we did here, but there is still certainly space for further downward momentum again, which indicates that we might still come back down to this level, this $5,500 to $6,000 level. Now looking at the MACD here, you have this divergence happening. So first of all, let's just enlarge that like this. So first of all, let's look a little bit of history. So we had this down, this low point in price over here, which correlated with, of course, this lower low on the MACD. Then we had a higher low on the MACD over here, which, you know, if anything, which of course is bullish divergence because we have higher low, but we have a lower low on the price. But unfortunately, this really had virtually no effect at all. And this bounce off of this bullish divergence was even lower. If you go from here to there, it was even lower than this bounce, which had no bullish divergence. And we came down again pretty low over here. Then, of course, we had this trend line over here of the bullish engulfing pattern of 1, 2, and 3, which did lead to a slightly more substantial uptrend. And then, of course, it was quite clear that this was not going to, once we had broken sort of from this level, it was quite clear based on this bearish divergence over here with the higher high, with a high here and then the lower low, even though we had almost the same price, that we were going to come down, which we did. And now, of course, there's the case that we have bullish divergence with this lower low. If we look at the candle close, 7775, and this higher low, which correlates with, of course, a lower low on the price, indicating bullish divergence at 6727. Now, while this is certainly a sign of bullish reversal, there's a couple of reasons why I think that it's not as relevant as some people might think. First of all, is that what's the point I wanted to make? Yeah, the level of price is just not as significant as here. So here we see sort of quite relevant. So we went from 10,800. Again, if you look at the price closes of the candle, 13,000 down to 11,000. That's a fairly similar change, and then in price to this change in price. So the 13 to 11, about 15%, and then of course the 11 down to this explosive 7,000, which is a much bigger change in price. So I think that I would like to see a slightly larger change in the price, and also, to be honest, a slightly larger sign of bullish momentum over here. In terms of, you know, a lower low over here, or a bigger difference between these 2 points. But nevertheless, it certainly is a sign that the bears are losing some control over the market, and that things may be looking to turn around. But again, although you have this sign of bullish momentum, I still think that this volume and the candlestick analysis shows that this just doesn't look like the kind of bullish reversal just as yet, due to the fact that the volume is not as high and that we don't have this strong volume on the daily to follow it up with yet. Of course, this candle hasn't finished yet, but we'll see how that plays out. And then on the daily, yeah, I think that's pretty much it. Oh yeah, there is of course this trend line on the RSI, which again confirms that there's some downward, some way to go down. And again, this would conform with my prediction of at least I would say like a 60% chance that we will actually reach this level of sort of 26 oversold RSI. And we have this 1, 2, 3 points here. I mean, it's not a huge reason, of course, but I think that we have to look at as many reasons as possible to confirm this potential of further downward momentum. Further downward action in price. And that is pretty much it for the daily, yeah, and the weekly.